Tim, what do you think of the German residential market? Seems to be a lot of interest, especially from foreign buyers. Do you see any sign of a bubble in the German residential market?
I think it depends very much on the type of residential stock we talk about. When you talk about foreign buyers, and I think you talk about private foreign buyers, then this demand focuses very much on the top 7 cities like Munich, Hamburg, Berlin. Mm-hmm. And I do believe that there is, in some aspects of this market, that there is a bubble because it's not really return-driven, it's just safety-driven or fear-driven investment. Mm-hmm. And I think the medium or long term, these prices have to stabilize or have to come down. They will not increase much further.
Some people saying it's just a catch-up from the past because the prices have been static for years, and what you're seeing now is sort of an accelerated catch-up.
I think it might be, for the overall German market, it might be a catch-up in a way, but the top 7 cities do not represent the entire German market. And when we see growth rates of rents spread over Germany, then rents are only increasing very little. Prices increase by less than 2% per year, and I think there is no bubble. That is clear. Mm-hmm. But there is more than a catch-up, I believe, in these cities we have just talked about.
Mm-hmm. So for any investors, it's advisable to avoid the 7 big cities and go into B and maybe even C locations?
Well, I think B and C locations are the right for a specific kind of investor. It depends very much on what money you have to invest. I mean, if it's opportunistic money, I think it's clear that there is not much money left in A cities. If it's a very low yielding money, let's say from a pension fund, it may still be possible to buy good stock at an A city, maybe a bit more on the outskirts and not in the hyped inner city areas. So yeah, the answer again is in a way it depends.
Mm-hmm. We've seen this rush for residential before in 2005 and 2006. Then it was very much driven by betting on that the tenants would buy their own house. Is that the case again, that investors expect tenants to buy their own home?
I think there is a clear no to that question. All the business plan we see when we manage assets for third parties do not have a high privatization rate. Mm-hmm. And even for the residential assets we have on our balance sheet, we have basically stopped privatization efforts. So we will ask tenants before we privatize buildings, but what we really avoid is like the Swiss cheese effect. If you start privatizing units, mm-hmm. it becomes very difficult to sell the rest then.